And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 7th of January 2024. This is the first weekly review of the new year, which is 2024. I welcome you all to my channel. In this weekly review, I'm going to go over DXY, the Forex market, Euro USD and Pound USD, the indices, the ES, NQ and Dow, and I'm also, as a protocol that I'm going to be following at the beginning of every month, I'm going to be covering gold, oil and Bitcoin. So it's going to be more of a macro viewpoint regarding oil, gold and Bitcoin, and on weekly basis it's going to be the same thing: DXY or the US dollar index, the Forex market, Euro USD, Pound USD, also known as the fiber and the cable, and the indices, the ES, NQ and Dow. There is a chance that I'm not going to be following with Dow in the future because this is not a market that I'm trading, and I'm just using it as a parameter to measure with the ES and NQ, which are primarily the markets that I'm trading. So nevertheless, let's get started. Starting with the DXY, as you can see now, I'm viewing the weekly time frame chart. You can see that price has retraced to the fair value gap and to the bearish order block. I have measured the bearish order block mean threshold, and I'm looking if price wants to trade up higher. Now I've also measured the constant Boltzmann of the weekly constant Boltzmann of last week's trading, the premium constant Boltzmann of the week, of the premium week, and I want to monitor that level closely. Next week, if we get any daily closure above that level, that's going to be considered that we're likely to be trading to the bearish order block mean threshold, and this is going to be the last line of defense. So the last line of defense is going to be the bearish order block mean threshold. If we close above it, we're likely to walk inside this fair value gap, fill it, and just run up higher to these relative equal highs. But mainly, I'm not looking for that scenario to occur because I'm looking for lower prices, and you can follow the last weekly review. I've showed you why I'm looking for lower prices, and I've shared the higher time frame charts, the monthly, weekly and daily, regarding DXY. So that's what I'm expecting. Even though it's a retracement and it's an up close candle, this is going to be a future bearish order block. So it's just a retracement to the fair value gap, bearish order block. We're likely to see another week like that, and then break down lower to attack the sell side liquidity and keep going lower. Follow the last weekly review to look at the monthly time frame chart, which I've shared the macro outlook with what I'm expecting regarding the DXY. So that's going to be pretty much it for the weekly time frame. Going to the daily time frame, you can see how price traced up higher, took the buy side liquidity that's resting here at the equal highs. Notice that we have here a bearish breaker, high, low, higher high, which is just above this high, which is what we need, because above these highs there's buy stops, people buying on strength, so they are in the markets. At this point the markets traded lower, took the sell side liquidity. Now the price is retracing here and working inside that bearish breaker. These 4 consecutive down close candles are to be considered the bearish breaker. So you can also notice the Friday's trading. Why would it be like that? Because last week on Friday we had NFP, and I've also live streamed that event as a liquidity case study. You can look into the live section in my YouTube channel. You can see that I've live streamed the NFP last week, and I took some longs actually just for studying purposes of liquidity. Nevertheless, This is why we can see this messy price action. Looking at the weekly consequent engagement, it is tend to be that it is also the weekly the consequent engagement of this premium week also. So looking at this and monitoring it next week, if price rally to it and treated it as resistance, we're likely to see the power of 3, the accumulation manipulation into the weekly consequent engagement of this level, and then distribution to the lower levels. We have the sell side liquidity, the fair value gap, and keep attacking lower to the sell side liquidity. So that's what I'm looking in terms of my outlook regarding the XY. Going to ES, I'm viewing the continuous contract and I'm also viewing the weekly time frame chart. You can see that we retraced to the fair value gap. We walked inside the fair value gap. We also walked inside the old high. The old highs, when we break above them, are to be considered as discount BD arrays. The same thing is mentioned when we're diametrically opposed and we're trading lower. Regardless, we traded and we walked inside the fair value gap. I'm still holding the bias for higher prices, and regarding the XY, I'm still holding the bias and the narrative for lower prices. So for ES, we're looking for higher prices, so just a walk inside the fair value gap, and I'm expecting price to just walk inside, to walk higher, attack this buy side liquidity, these both buy side liquidities. By the way, this is the all-time high, this buy side liquidity, which comes at 5,029 and a quarter, which is the all-time high. You can go to charts and you can check it out. Anyway, I'm expecting this candle, which is just forming, to be a bullish order block. Now, how can you trade those bullish order blocks? It's likely that I'm gonna be sharing a teaching in the future to teach you and to show some insights on how you can trade the bullish order blocks. You can trade them with the limit orders at the closing price or stop order at the opening price. I'm not gonna go into details here, but you're likely to see some notes regarding that in ICT's core content, or I'm gonna be sharing a teaching about how you can trade the bullish order blocks or bearish order blocks with limit orders or stop orders, which you can be in the move before the actual move happens. So that's what I'm expecting for ES, weekly chart. Daily time frame, you can see how price took out the sell side liquidity, walk inside the fair value gap. This is the daily fair value gap. You can see how price traded to it, filled it. And regarding the weekly fair value gap, you can see how price traded to the consequent encroachment of the weekly fair value gap and repelled away from it. Now, if it wants to retrace, you can see that this is balanced out, immediate rebalance. We are looking at this fair value gap. I want to see price trade and draw to it. Next would be this buy side liquidity and the buy side liquidities that I mentioned earlier on the weekly time frame chart, this high and this high, which is the all-time high. So this is what I'm expecting for ES. Going to NQ, here is the continuous contract and I'm viewing the weekly time frame chart. You can see how price also on NQ has retraced, walk inside this fair value gap. You can see how it filled it to the tick, walk inside the monthly inversion fair value gap and repelled away from it. Old high is now treated as a discount BD array and we're likely to see higher prices. This is to be considered as what I'm looking at is a potential bullish order block forming. So next week, if we trade above it, this is to be considered a bullish order block. Orders can be taken it. Now, if I'm looking for high prices, and if in fact we see high prices and we attack this buy side liquidity, smart money are accumulating longs in this retracement lower. So they're accumulating longs in down close candles, and if we're trading lower, so let's say we're trading here, they are accumulating or distributing shorts in up close candles. This is how smart money position themselves in the marketplace. They go against the tide. So normally when we're bullish, people would be buying in the up close candles because this is what the nature feels to do. So you wouldn't be wanting to trade or go long when price is going lower because it goes against your natural instinct. But for smart money, or the algorithm to be specific, it does the opposite of what the actual human being does. So human beings like to buy when market is going higher, when the algorithm likes to or it does sell short when price is going higher. Just as you can see here, all of this up close candles, the algorithm is selling into this high. So it's selling in the up close candles, and when we're seeing the bullish price action, you can see that they're buying in the down close candles and then distributing to the highs, right? As you can see, the highs and the inefficiencies that are present in the marketplace. So this is in nutshell how the market maker move and facilitate orders in the marketplace. So this is the weekly time frame chart. You can see the daily time frame chart. I'm honestly thinking that this is just a sucker bearish breaker, although I might be wrong, but I'm still expecting high prices because we still have unfinished business up there. So this is just, I'm thinking that this is just a, let's say, a sucker bearish breaker. And also this fair value gap is to be treated later as an inversion fair value gap. So price will be trading up higher and closing above the low of this candle and treating that area from this candle's low to this candle's high as an inversion fair value gap. And you can be doing some measuring and some mathematical equations to get an anticipation of what the breakaway gap can be formed. I'm not going to go into details of how can you predict or anticipate to a high degree of precision the formation of the breakaway gap, but I might actually produce a teaching on how you can do that. I have many executions and many videos of how I have been predicting the formation of the breakaway gap, and as I've mentioned, I might produce a teaching in the future regarding that topic. So price has worked inside. You can see how the bodies are respecting the monthly inversion fair value gap, the Friday's trading, which is NFP, the weekly fair value gap, we have filled it, as you can see, and we'd like to see that. You can see all the high here, all the highs, we retrace to them. So I think this is where the resistance turned into support would play out when it is overlapped or converging with the actual concepts that the algorithm is moving with. So this is what I'm thinking for NQ. I'm still looking for high prices. I think this is just a sucker play for the bearish breaker. I think it's just a sucker play to get sellers in when we retrace here. So that's what I'm thinking. So that's pretty much it for NQ. Going to Dow, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. Nothing pretty much to say about Dow. I think I'm not going to be, as I mentioned at the beginning of the weekly review, I'm not going to be sharing my thoughts about Dow pretty much more frequently than I'm doing. So you're going to see Dow less frequent on my weekly reviews, but from between now and then, if I see decent move or a move to be mentioned, I'm going to be sharing what I think about the marketplace. But I'm still aiming for higher prices. The all-time high price can retrace, as it has retraced on NQ and ES. It can retrace to the weekly fair value gap and work inside of it before attacking the all-time high. The daily time frame, as you can see on NQ and ES, it has attacked this side liquidity and walked inside the weekly fair value gap. On NQ, it has filled this fair value gap, but on Dow, it didn't. So I'm still expecting higher prices regardless. So that's going to be pretty much it for Dow. Going to EURUSD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see how price retraced, worked inside the bullish order block. Now, why am I choosing the bodies, the opening price? Because there's no fair value gap. Your question is answered. So we retraced the bullish order block, price repelled away from it. Still looking for higher prices. We have this buy side liquidity, this buy side liquidity. That's what I'm aiming at for the weekly time frame chart. You can see on the daily time frame, price has retraced. You can see how when it reached to the volume imbalance of the weekly time frame, you can go back in the past. You can see it when price reached to it. We've seen some reaction, retracement to the inversion fair value gap between this candle's low and this candle's high. We have an inversion fair value gap where price has closed above it. The bodies are respecting it. This week on Friday, it has retraced to work inside the bullish order block that is on the weekly time frame chart, as you can see. And now I'm expecting higher prices, attack this buy side liquidity, close above this fair value gap, treat it as an inversion fair value gap, and attack this buy side liquidity and this buy side liquidity. So I'm still bullish on Euro USD. Going to Pound USD, as you can see, price has retraced here, have a long discount wick, so you could be measuring the encroachment and you can be monitoring it closely. If we close on daily time frame below it, we're likely to see price take out the sell side liquidity and reach the rejection block at least. Otherwise, if price retraces and treat it as support, we'd like to see higher prices attacking this buy side liquidity and those buy side liquidity. I'm mainly looking for higher prices. You can see that this is fair value gap. This is regarding the daily time frame. As you can see right there, we have the buy side liquidity, this buy side liquidity, and we have the fair value gap between this candle's low and this candle's high. This area is fair value gap, and if price would want to trade to the buy side liquidity here, I'm expecting price to take this buy side liquidity and trade up higher. You can see if price would close below the weekly constant encroachment, we have relative equal lows here. Price can dig one more time below these, trade to the bullish order block on the daily time frame, which is a refined one, rather than the weekly fair value gap here. So it can retrace to the bullish order block, take out these relative equal lows, and then run up higher. So this is a potential move in the marketplace, but there is one caveat that the price that doesn't. I don't want to see price close below the weekly constant encroachment. It can wick through it, as you can see. It can wick through it right there, but I don't want to see price close below it. So that's for Pound USD, also known as the cable. I'm looking for high prices. I'm bullish. Going to gold. So here's the macro outlook of what I'm thinking regarding gold, oil, and Bitcoin. Gold, you can see we had a rejection block here. I was thinking, and even my mentor was thinking, that we're going to be attacking the sell side liquidity, but we didn't. We reached the rejection block and then we retraced. Actually, here is where there was some geopolitical things that are happening in the world. They occurred right there, and we formed a low, and then we attacked the buy side liquidity. We attacked the buy side liquidity. As a result, we formed a bullish breaker. You can see our price retraced, walked at a bullish breaker, and the fair value gap. I had execution there, so I executed this trade, and I was aiming at this buy side liquidity, which is the all-time high. The all-time high is with other highs is a relative equal highs. You can go to your charts and you can see that there's two more highs before this, so it formed a relative equal highs, but this was the highest one. So price attacked the buy side liquidity. So right now we're inside the range, because after expansion you expect some kind of a consolidation. We have a rejection block here. Price is trading at it. Now if we get any daily closure above the encroachment of this premium wick, we're likely to see higher prices attacking this buy side liquidity. If not, we're likely to see a run towards the sell side liquidity. We have formed, as you can see, relative equal lows, so price can take out these relative equal lows before actually running up higher. You know what is occurring around the world, and with the BRICS nation, how they are accumulating gold to back their own currency. So we're likely to see gold go to its actual value, its actual value. So to do that, you know, the BRICS nation, with all the new members that have joined lately, I think we're gonna see another dip below these relative equal lows for smart money and for the BRICS nation to accumulate as much gold as possible below these lows, and the gold is gonna be just running up higher non-stop for next 5 to 10 years. So that's what I'm thinking. I'm still looking for higher. Right now, as I've mentioned, I'm looking for lower prices to attack these relative equal lows, then higher prices until wherever they want to drive it to. But that's what I'm thinking in terms of gold. We're still working inside the rejection block, and we have, as I mentioned, the last line of defense is going to be the constant encroachment of this wick. I'm monitoring the constant encroachment of that premium wick. If we get a daily closer above it, that's going to be telling me that we're likely to attack this buy side liquidity. Otherwise, I'm looking at the sell side liquidity to go to attack the sell side liquidity and potentially these relative equal lows before we actually run up higher. So that's for in terms of gold. Going to crude oil, as you can see, we have for crude oil we have a bullish order block right there. Why did I choose the highest wick? Because there's a fair value gap. You can also plot the fair value gap and draw it in the future. You can see a price walked inside of it. Anyway, price walked inside the bullish order block. We have a buy side liquidity here, we have the buy side liquidity here, we have above this buy side liquidity, we have or relative equalize, we have a fair value gap. Now if you go to the daily time frame, you can see how price wicked one more time, wicked the first time, so it drove to the bullish order block the first time, but we know that for high time frame bid arrays, we expect price to walk inside the high time frame bid arrays 2 times at least. So the first time it traded into the bullish order block, the weekly order block, and then it retraced up higher. Many people are going to be selling or buying right there on strength after we took out this buy side liquidity. They're thinking that we're done, this is the bullish order block, and they set their stop loss, they trail it below this low. Price traded lower, took out this low, and then run up higher. The actual move starts. We have a bullish breaker here from this high. Price retraced, walks inside of it, you can see, and respected. You can see how price respected the bullish order block, and the weekly bullish order block, you can see how the bodies are respecting it, and then run it up higher. So I'm looking for high prices. You can see this buy side liquidity, we have these relative equal highs, and inside just above them we have the fair value gap that I've mentioned on the weekly time frame chart. So this is what I'm expecting for oil. We're looking for higher prices. For Bitcoin, we have the monthly time frame chart. You can see how price formed a low, took out the low, ran up higher. We have a bullish breaker. It's more significant on the weekly time frame chart. You can see that price retraced to the fair value gap, rallied up higher, walked inside also this fair value gap, and rallied up higher. We have these relative equal highs, and we have the fair value gap. So that's what I'm looking for if price wants to run up higher, and then we can see a retracement run up lower to take out this, at least these relative equal lows, before we can actually see the bull run that can happen next year, or in this year and the next year. So that's going to be pretty much it for this weekly review. I hope you found something insightful out of this. I want to inform you that next week on Thursday, the 11th of January 2024, we have CPI. So it's very important for you to stay away from the marketplace at 8:30 in the morning, because market's going to be doing just random moves, and you want to be careful, and you want to be careful about your trading habits. So that's going to be pretty much it. I really hope you found something insightful out of this. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.